Yesterday the Nasdaq crossed 25,000 for the first time. The S&P 500 hit a new record. April was the best month for markets since 2020. And this morning the government confirmed inflation just accelerated to 4.5%. Both things happened in the same 24 hours. This is your briefing. The PCE Price Index, the Federal Reserve's own preferred measure of inflation. 4.5% in Q1 2026. Up sharply from 2.9% last quarter. That is not a gradual increase. That is acceleration. And it happened while gas hit $4.30 nationally. Consumer sentiment hit a 74-year low. 100,000 workers were cut from the workforce. Meta confirmed 8,000 more cuts on May 20th. The market celebrated anyway. Record highs. That contradiction is not an accident. It is a feature of how this economy works. And understanding it is the difference between reading the news and understanding what it means for you. Here is the honest explanation. Stock markets measure corporate earnings, not worker well-being, not household stability, not job security. When Meta cuts 8,000 workers, its cost structure improves. Margins expand. Earnings per share goes up. Stock price follows. The worker who lost the job and the investor who gained on the stock are experiencing the same event from completely opposite positions. That is not cynicism. That is the actual mechanism. Record markets and record layoffs are not contradictions. They are two sides of the same transaction. Understanding that changes how you think about your own position. The Fed has a 2% inflation target. PCE is now running at 4.5%. More than double. That means the Fed cannot cut rates. Which means mortgage rates stay elevated. Which means housing stays unaffordable. Which means the squeeze on household budgets that consumer sentiment is already capturing gets worse before it gets better. And the Iran blockade is holding. Oil near $100. Gas at $4.30 and rising. Those energy costs flow through to everything else with a 60 to 90-day lag. May and June inflation numbers may be worse than April. The acceleration is not over. Move 1. Separate market performance from your personal financial picture. The S&P at record highs does not mean your household is financially safer today than last month. Your financial security comes from your income, your runway, and your position. Not from an index you don't control. Move 2. Inflation at 4.5% is your salary negotiation data point. If your compensation increase was less than 4.5% this year, you took a real pay cut. That is math, not opinion. Use it in your next compensation conversation. Move 3. The companies cutting workers while posting record profits are telling you something important. The margin between what you cost and what you produce is being scrutinized more carefully than ever. Make sure yours is visible. Not assumed. Documented. Nasdaq at 25,000. PCE at 4.5%. 100,000 jobs cut. Record markets. Record layoffs. Same economy. Two completely different experiences. Comment record below if you feel the gap between the headlines and your actual life. This is what the talent. The move is yours.